So, in the time I walked home from work to the start of this, we saw some pretty interesting moves. US dollar getting weaker against, stronger against the euro, but weaker against the dollar yen, and a little bit of pushback here against the pound. Now, this is not what I expected to happen today. I was actually looking for the pound to break higher. Now, after last night, the market had some nice recovery, and then we got the news out about the House of Lords passing the vote. And my whole game with the pound is that the recovery vote's going to be pretty clean and successful. Recovery trade is going to be the main theme, and it's going to come in waves. And I thought there was going to be a wave starting today, and that the market would break 125, 125.40, and be heading up towards 127. That's a short-term sort of move. Now, this sort of failure at 125 is not great for that idea. I'm a little concerned here that I'm going to be on the wrong side of this pound now. So I'm watching it pretty closely and just sort of, I might get stopped out. I might just put, buy a little bit more, and I'll put some stops in, not too far away, say 40. Because I bought at 125 when I saw that move up this morning in Asia, and things were looking pretty good for a second, and then just chopped around a little bit. And now it's pulled back, and it's I might be on the wrong side here. So if I get stopped out, that's fine. It's just not time for that trade yet. And if it gets any lower than this, then probably the range will hold. And if anything, if downside breaks, we've got some downside action. So I'm bullish on the pound. That's pretty clear in the fact that I've been selling euro pound so adamantly for the last couple of weeks. But yeah, this is not what I wanted to see today. I was hoping for a bit cleaner in terms of the move. Now, in terms of the euro weakness, that's not great as well, dragging down the pound, and dollar yen being so weak is just perplexing. It's almost like pound yen and euro yen are just rolling over the major here, and just creating too much of a drag for the dollar yen, which has been idly and sort of listless for a while. Hasn't been able to really respond to euro-led US dollar strength, and ignoring the stock market, which is sort of new paradigm here for the dollar yen. Usually stocks so strong, like the DAX breaking 12,000. I would have thought if DAX was breaking 12,000, that would be above 115. And in the last couple of weeks, we've seen this sideways action in dollar yen, and most noticeably since that failure of 115, things have been a little bit mixed here. So yeah, I mean, it's like dollar yen stepped out of the US dollar Cubicon. It's not really part of the game anymore. It's doing its own thing, and it's not being led by the stocks. It's not being led by yields. It's not being led by the US dollar itself, and it's making it a little harder to trade. Today we got RBA Governor Lowe speaking in the morning. Nothing much was said. Aussie dollar though did find support at the 75.50 a couple of times yesterday, and has been resuming its grind higher. So if we hold above 77, it's going to become more inevitable that we do break previous highs, at least test them. 77.50 though is a much bigger level in the market. What happens here with the euro at 105? I mean, we're down at euro 105 without much fanfare pretty quickly. And if it holds, then that's great, and we could get some pushback here. Good for the pound trade, as long as the euro pound short squeeze doesn't get out of control, because the euro pound is having a little squeeze as a pound as the euro finds support. But just broadly, you want US dollar weakness. You want the euro on the front foot if you really want to be buying the pound most of the time. So let's see how this plays out here. I could be completely wrong on this pound, but I do like the recovery trade, and I do like it higher. I like it higher against the US dollar, so as well as against the euro. I didn't jump into the madness, which is pound yen, but obviously if the pound's going to have a big enough rally, then it should do okay against the yen as well. But the main two ways I want to play it against the US dollar and the euro. So we'll see how that plays out in the coming. We do have some data out actually in 20 minutes. Second reading of the GDP number from Q4. forecasts to remain unadjusted, so you know, not big news there. IFO came out strong from Germany, and that's really the most notable, you know, moves that we've seen. Last night we got the auction from Dairy Auction. It was weak, but surprisingly, the Kiwi, which is Trickster, the Kiwi did not break that 200-day moving average at 71.30. We were actually down here before, so it bounced off it. I haven't looked into the internals. Perhaps the whole milk powder part of that report was quite strong. So let's see how this plays out. This is definitely weird action. No need to be crazy in the market. I am buying pound dips, so hopefully we don't get stopped out. See how we go. I want to see it back above 125 in the next hour or so. I mean, the first move down in Europe is not that big a deal, but it's not, you know, it's a little bit bigger than I expected. You know, the move back to 80, that previous resistance happened early. Yeah, it bounced up. I was like, yeah, we're beginning, and then we stalled again and came back down deeper. Just quickly need to see the buyers overrun here, overrun the sellers, which is, you know, quite tentative so far to be pushing higher in the pound. That's for sure. Now this is in the back of even weak, you know, economic data out of the UK. You know, the weak economic data and the market bouncing off it, and the strong US dollar and the market bouncing off it, was part of the reason I was so bullish on the pound. You know, weak data not leading to sell-offs was what I sustained sell-offs was what I was banking on here as sort of like the inside view that the market was on the wrong side. The sellers were on the wrong side. So I'm optimistic quietly, but yeah, a little bit concerned by this first move. So those are my two trades I have running at the moment: short euro pound and long pound, and with stopped entry on the euro pound and 124.40 on the pound. Do you think it can push higher? Yeah, look, apart from being overbought, there's no reason to be selling the DAX or the Dow. But, you know, we talked about early in the week that as we get closer to Trump's speech, perhaps profit-taking will come in. Now, profit-taking is short-term, and, you know, you really shouldn't dissuade the market from testing the previous highs up here at 12.4. That could happen later in, in March, say, if the markets get a reprieve from the Fed not raising rates. You know, just same old, continue grinding higher. But yeah, right now, as we come into this Trump speech, I expect a bit more two-way action, not just straight up strength. So yeah, I wouldn't be buying above 12,000 on this time. I would buy a dip though, if we got a suitable sort of pullback just from profit taking. And then, you know, you're buying expecting Trump to deliver. That's another big if Trump can deliver on next Tuesday. Markets will love if he announces tax cuts for companies. Stocks will love it, but depending on how he delivers and whether it's achievable, you know, those sort of questions become the main topic probably afterwards. So, you know, interesting times coming in the next week of trading. I think you're right there. That euro pound is going to go down towards 83 there, Potter. That's my main target there. I'll be holding it. I think bounces are going to be sold. Therefore, you know, a little reason to be long the pound. If the euro breaks 105, then that's not going to help this pound. I mean, US dollar strength from that might be more considerable. And the euro will go down to its next support, which is that previous low from last year, down towards that 104, 103.50. Yeah, and that, you know, that drags down the pound perhaps towards its 123.80 level, and if that breaks on 123.80, and you know, maybe some things not going well in negotiations, then we got some issues here. But if you look at this, right, these lows are getting slightly higher, and you know, so the highs are getting a little bit lower, so that compression is beginning to get real here. It's going to break one way or the other. And the next move will be 200 pips, right? Probably. So, you know, you've got to keep that in the back of your mind as well. I favour the top side, but pound is a tricky one. So data tonight's not going to be big for it. It's mostly to do with actually, there's a speaker from the MPC. challenges to ensuring financial stability. Maybe not on topic, but still, it would be good to see. That's at 10 o'clock, so 2 hours from now. And we'll see what he has to say for himself. There's just so much resilience that I think the top side is more likely than the downside. Resilience in the face of adversity, I like that sort of trading from my pairs. Sucks the sellers in, if that makes sense. Long Euro Aussie, what's going on there, boys? It's a tricky one. I wouldn't be, I wouldn't be hoping for too much in it. It's like sort of like selling. It's like buying euro pound, right? You're buying for the bounce, or you're buying for a considerable reversal. I mean, if 105 holds and we squeeze back up towards 106, of course you're going to do okay, but it looks technically like it broke, right? So, yeah, I mean, I wouldn't be hoping too much here. Let's see. Alright, let's have a look at some of the banks' little views on this. Yeah, there was pretty big news last night. The Bank of Mexico came out with the FX hedge program worth 20 billion, I believe, over the whole time. That spooked the buyers, right? And then we certainly never want to surprise the markets. Still, I mean, the amount of talk that you're getting, this was Harky yesterday, the amount of talk that you're getting about raising rates means that, say the NFP comes in pretty strong next week, I don't think it's like a huge surprise if the market turns a little bit more hawkish, start to price in above a 50% chance of March. A strong number can do that for sure. We're getting an uptick in volatility here, guys. This is good for us, right? We want to see this sort of movement. Yeah, I mean, Aussie Kiwi towards 105. Let's have a look at Aussie Kiwi later, yeah? We'll have a look at some of the, there's a good report put out by Westpac every couple of months. I'm not going to, sell the Aussie Kiwi given the current market mood. But I definitely would not be trying to anticipate the break here. It would be fairly skittish. Now that the Kiwi held that big level, perhaps this is not going to be such an easy trade, the Aussie Kiwi higher. Aussie dollar as well, failing at 77 again. Perhaps the shorting would have been the ideal little trade there, risk-reward wise, selling up towards 45, putting a stop at 70 or 80. And then seeing how the market went at the big level. Yeah, it's an interesting trade. We'll look more closely at that in a sec. So not much to comment here on the Brexit bill update. Past the House of Lords, initial reaction was positive, hasn't really followed through in Europe yet. Alright, so we're going to start to see more and more banking reports on this big speech coming up. Let's see what Deutsche Bank has to say. Joint session of Congress on 28th, and that the release of the White House's phenomenal tax plan in the next fortnight or so. I'm not going to lie, I'm not 100% sure what the Ryan Brady BAT proposal is. I'm looking like a fool in US politics. Border ejects. Oh, this is the border tax stuff, right? So this is, you know, part of the plan to replace some of the corporate taxes. Yeah. I don't know enough about that. I'll have to read into it. But that's, yeah, definitely part of that tax plan. Alright. Dollar CAD. So Canada is also very, you know, so close to the US that this is such a big deal for it. Bank of Canada could be forced to react by cutting 25 basis points and possibly employ some sort of forward guidance to weaken the Canadian dollar. In extreme case, the Bank of Canada could hint at quantitative easing. Wow. Wow. This is huge if this happens, right? For the Canadian dollar. Dollar CAD would mark. Dollar CAD will likely move 5% higher on a border tax. Wow, so this is really important for us. I mean, I have been paying close attention to the dollar CAD for a long time, and you know, this could be some serious volatility coming here, and the volatility might begin on Tuesday next week. I will read much more into this and prepare some trading strategies. Perhaps options might be a way to trade this. This is some pretty interesting sort of news for me. I hadn't really known that Canadian dollar was on the chopping block to that level. They think that the European political risks are going to continue to grind away on the euro. Okay, the pound reinforced the base at 124. Is likely to trade bid as long as is above there. However, the US dollar is still very much in play. Cable might have a difficult time to trade higher very easily. Yeah, we're seeing that, alright. Your pound across is broken below 200-day moving average. And could now see further downside. Stay short with a stop above the 200-day moving average. Support looks pretty light from here as well. Yeah, that's true. Dollar yen, I want to see what they make of this. So it's a short euro yen that's really in play, not the dollar yen. Getting pushed and pulled by the US dollar strength and weakness. Aussie dollar, tight range, very hard to trade at the moment. Kiwi. So yeah, Kiwi did hold the big support. Still looking to fade rallies. Yeah, there is some really crazy stuff going on in the markets at the moment. This decoupling between the VIX and the equities is just as extreme as it's ever been. Something's got to give. You know, I really think we're in for some downside action at some point in the next 2 weeks in the stock market. I would be really cautious buying up here, guys. It's that decoupling and divergence doesn't last for long. It's for me, there's so many alarms ringing. You know, let alone dollar yen being dragged lower. That hurts the Nikkei, hurts the sentiment in Asia. DAX is doing well because of the euro falling, but that's not the best reason in the world to be buying an index at all-time highs. That there's political strife on the horizon, potential political strife. Alright, so yeah, I mean, we're eventually going to get a big story and a big thing in the market. Volatility will return, hopefully sooner rather than later, because it is becoming a little bit complacent almost in the market at the moment, that things are going to be so gentle, especially Aussie dollar, extremely gentle. I would hazard to guess that within 2 weeks we're going to start to see some much bigger moves as a story breaks through that can sort of take hold. Whether it's Trump being good or Trump being bad, either way we're going to get some movement. I doubt he's going to come through as spot on. Alright, let's finish up with the Aussie Kiwi, right? We'll have a look at the Aussie Kiwi. A lot of you traders looking at that. We've been watching it grind up towards that 107.50. Has anything changed is the question. I mean, Aussie dollar is getting a lot of support from the strong... Aussie dollar is getting a lot of support from the strong commodity rally. And we're seeing iron ore and copper back at levels where the Aussie was near 90 cents. So in that terms, where Aussie dollar is underperforming the commodities, but it's it's not that clear that the US dollar, that the Aussie dollar is going to 80 cents or anything. But yeah, I mean, it makes more sense to be long the Aussie on that alone than anything else. And the Kiwi being backed down by the governor at the RBNZ was half the reason we jumped so sharply. We got some big tech resistance, and just generally the Kiwi being such a strong performer in a market of low volatility is just what you're competing against here. Alright, so they're arguing for patience here, plenty of upside. We've been seeing this for a long time though. So this is a gap that they have to sort of get back to be normal. This is the difference between the RBA and the RBNZ. 2 year. It's probably going to be at the end of the day, if the RBA turns hawkish while the RBNZ remains neutral, then that will provide the impetus to get the 600-point rally in the Aussie Kiwi to get it back to that fair value 113-ish level. So you see here, this is where the big discrepancy is coming. The iron ore, coal and copper are just surging higher. This is not the difference in the commodities there. This is just general relative commodity. So there is some delay. There's a lot of reasons why you expect it to rally. So short term, about 5 cents below fair value. Now they've been saying this for 12 months though, guys. Remember that. Let's not get too crazy because they're doing this report at 107.30 when last time they did report it was 104. You know what I mean? Like they're a bit more keen now, aren't they? But they didn't see it coming. The timing's been off on these guys for a while. So let's just not count our chickens before they roost. You're basically betting against the Kiwi, right? Aussie dollar's fine, but you're betting against the Kiwi. Kiwi's, isn't really that big an underperformer in the current market. It might be actually better to buy Aussie versus Canadian dollar on the back of that border tax stuff, right? So we want to be looking at other options rather than Aussie Kiwi. Aussie CAD could be one. Pound had a little attempt there. Sold into that really quick though. Let's see how we go here, guys. I mean, pound yen is pulling down the pound. That's part of the problem in this game at the moment. So the pound yen is a big factor in how the cable goes, and with it coming under pressure, it's going to be very hard for the pound to go berserk. Usually, you want the dollar yen to be stable or grinding higher for the pound to really do well. Yeah, so keep an eye on the pound yen. If you don't watch it normally and you're trading the pound itself, then watch it today. Can get quite aggressive. Alright guys, I'll finish up there. I'll be back tomorrow at 9 GMT.